confirm what I'm looking at. So I thought that we would spring out of this coil higher, but today we never got to this price. We never got to 153.5. So no harm, no foul. You put the buy stop in there, it doesn't go there. You simply cancel it at the end of the day, and you look for something else. So this is a layered, four-step program that requires the markets to confirm what I'm looking at. So yesterday we talked a good deal about stocks, and I said you can apply this trading methodology to any and all trading markets. I don't care if you trade in the futures markets, the oil market, gold, interest rates. You can apply this four-step technical trading pattern analysis to any trading market. So we spoke a lot about the stock market yesterday. And then today I'll talk a little bit about, one of my favorite FX pairs. FX, I talked a lot about the stock market yesterday because I just try and find wherever there's movement. I'm not interested in just sticking around trading a sideways, trading market, trying to, shoot at darts, trying to pick, 7 pips or 20 pips here and there. I'm looking for moves and setups that are going to extend from one level to the other. And frankly, the volatility is really contracted in the FX markets, meaning that it's become very range bound. So I have curtailed a lot of my FX trading, and I just stick to things that I really love. And if you've been a part of my webinar series, it's a good chance you might have heard me talk about the pound versus New Zealand dollar. Ever since the pound New Zealand dollar bottomed over here many, many moons ago, I've been saying this is a bottom and this market is going to go higher, but you can see that it's just kind of gone sideways and now it's starting to go higher. So this was an email that went out June 2nd, so whatever that was, 2 weeks ago. And it was a buy stop in the, again, I require the market to confirm what I'm looking at. I put a buy stop there. This did get triggered. I'll show you in a moment where the market's trading now. And I said I've been steadfastly been of the view since pound New Zealand formed a double bottom bullish price pattern 3 months ago, this pair will find a way to go higher. While it clearly has been a bumpy ride, I'm still sticking with my conviction. The key reversal price action around 193 in this pair very likely represents the downside risk. And so this is all about risk and reward. So finding those bars where you can identify the risk. So this was a follow-on email about 6 days after that, email earlier to add to the position. So we got in at 196.11. Market started going in my favor. I, recommended that our members add to their position. I said, I'm currently long pound New Zealand at 196.11 on June 3rd. Based on very favorable price action, this pair, I'm looking to add to my position. And this is what we're looking at now. So here is a handful of pound New Zealand positions that I've been accumulating all the way back since early May, just holding on to them. They've been up, down, sideways, but I'm under the conviction this pair is going to go a lot higher. I also snuck in a buy of a dollar yen there because, dollar yen is not going down. So I just decided to see if, it would go up. So you can see that I've been long pound New Zealand, 195.42, 196.27. Here's the 196.11 and the 196.70. Over the weekend, I suggested to our members to get short gold, and right now I'm making a few shekels short gold. But this is principally, about pound New Zealand and why I think pound New Zealand is going to, go on a tear. It may take, time. It may take days. It may take, weeks. It may take months. But I'm just going to sit in this pair. And, I just made an untold fortune in pound New Zealand dollar based on the objective price pattern. So all I look at is what's in front of the screen here. Price action. This is a daily chart. It looks pretty sideways. It looks like a carnival ride. But if you drill down, this market was telling you where it wants to go. So I'm going to peel back and look at a longer time frame. I'm going to look at the weekly chart. And again, I don't look at 5-minute charts, 10-minute. I don't really look at intraday charts because I'm trying to take advantage of the bigger moves in the market. And you simply can't do that trading on a 15-minute chart. You can't see enough history. Sorry, let me just get out of this. And so the wider you can pull out, the more global view, the more history you can get, the better. So this is a weekly chart of the British pound versus New Zealand dollar. Looks like kind of a pair that, for the most part, has gone very sideways or all over the place. You know, if you kind of look at this thing, it just looks like, well, this is a pick'em. You know, this could go up, it could go down. And so whenever there's some ambiguity, I like to drill within the prices and see if I can't find certain patterns that are going to tell me where the next direction is going to be. And to my mind, you know, pound New Zealand crashed here and then put on this double bottom. So let me just take away this distraction here. So you can see that prices got to this low, crash from much higher levels. And then we put on one bottom and then another, forming this double bottom. And this is exactly what it sounds like. Market goes to an all-time low, bounces off that low, retests the low. And when it comes through the neckline, that simply confirms that this market has bottomed. And if a market is bottomed, then it's going to do what? It's going to go higher over time. And I was saying that all the way from late 2016, early 2017. You know, I was telling our members, this thing is bottomed. And then I just find a way to get, so then you also have the rounding bottom, and both of these shared this neckline, which is simply a line drawn through those patterns. So what became resistance at 180 then became new support. So then you can see in this time frame, you have another double bottom. But this is really what I call the governing price pattern. This double bottom, rounding bottom. So this pattern, even though it occurred 5 years ago, this is still informing us which way this is going to go. And by the way, I don't think this is going to be an exaggeration. I think you will see prices up there. Now, how do I know that? You know, do I have a hotline to the central bank in New Zealand or the UK? No, I don't. I'm just looking at price patterns. And when a market has told me that it's bottomed, then it's just going to do what over time? It's just going to go higher. Now, you know, this is, you know, a carnival ride. It tests your patience. It tests your will. You know, I said that right here, the double bottom here, that we had bottomed. But I also said at that time that because prices had cratered, you know, to that point, that markets just don't go straight down and then go straight up. So even though, and I, you know, was consistent on all these webinars, I said the market has bottomed here, but it's likely going to take a while until this thing turns around. And the metaphor I always use is, you know, picture if you were a captain of an oil tanker, you know, pulling out of the Gulf. You know, you're now in the Indian Ocean there with this huge super tanker, and you get a call from home, and you say, "Look, man, you need to just come back home. You need to turn around." Well, it would literally take 18 miles of ocean until that ocean tanker was able to turn around. And I think this is an appropriate metaphor for the markets. So the markets need to kind of build space. When they kind of crater, they need to, like the super tanker, build, you know, some room, build some space so that it can turn back around. So this is just a huge super tanker out in that ocean that is in the process of turning around. So now we have the double bottom here. You kind of see this inverted head and shoulders here. So you have the double bottom, the inverted head and shoulders, all connected by this common neckline, which again is simply a line drawn through the entirety of the pattern. And so now you haven't even gotten to the point where this has started. So I've already made $140,000, and I don't think this pair has even started. The gun will go off when we finally clear, you know, above this neckline around 198 or so. So if people say, well, you know, is it too late to get in? No, it's not. I predicted down here, this was going up 1,000 pips. Here it's going up 1,000 pips. And here, I think it's still going up 1,000 pips. So I think you are going to get a monster move in this pair. I don't know why. I just have that feeling. You have all of these collective, and again, the more mature a pattern is, so you can see how much work, how much bump and grind this thing has done, so that when it finally starts breaking loose, it's going to come, you know, out of here like a bat out of hell. And so this has been my preferred Forex, you know, pair. I don't, people say, well, how many trades a week do you send out? Whatever. To me, it's not the quantity of trades, it's the quality of trades. So if I told you, hey, instead of, trading in and out of the pound yen half a dozen times trying to scoop out 7 pips, what if you could just make one trade in one pair and just sit in it for 6 months? And the thing is, would you be able to do that? Because we all love the bump, we love the rush, we love the action of trading. We like feeling like we're doing something, but the more we're doing, the more you're digging yourself a hole, So, it's that old metaphor in life, when you're in a hole, stop digging. And so to me, I love finding things that, requires no digging, requires no action. I just put on my trade and sit back now and watch it. I'm just going to watch this thing for the next 3 weeks, 3 months, 9 months. I was in this trade. I got in here and stayed in this trade for about 13 months. So, so Thorsten says, where's the entry point stop loss to beware of stopping out? So again, this is what I send out, in my emails. I tell our members exactly. So in this case, the buy stop was at 196.11. The stop loss was whatever, 250 pips lower. And I'm going to, that sounds scary. Most people say, well, you have to have a huge account to bear a 250 pip stop loss. And I'm going to show you that is just an insane myth. And then I put a take profit that is arbitrarily, very far away. So you could see I put my take profit 800 pips above this entry. And now if the next day, went and took me out, I'd say, well, thank you, I'll take 800 pips. But it's my intention that if I'm right, and, I'll only know if the market starts confirming, that it's coming out of here, then I will start moving this take profit further and further away. If this is going to go to 210 or 215 or 218 or 221, I'm not going to, stop it from making me profits. And I will, bring the stop loss behind me, but not so close that I'm going to, squelch it out. And so I'm going to talk about money management in just a moment. So here was the other email where I had a buy stop at 196.87 with a stop loss. Well, it looks like 170 points lower than that. And so I think this is probably an important juncture to talk about risk management. So this is a position size calculator. So let me just back up here. I just want to just take out so you go to calculators, you go to position size calculator. And so this is exactly what this sounds. So you don't have to scribble it down. I'm going to take this link. I'm going to put it in the chat box. And so this is how to control your risk. And this is how to, participate in a 2,000 pip move in the pound New Zealand dollar. Now, you can't have an expectancy to make 2,000 pips with a 10 pip stop loss. This thing has been like a carnival ride. It's been bouncing 500 pips. Now I think the risk is getting less and less, but you still can't put a 30 pip stop loss on this thing and expect to stay in it. It's just too volatile. And so basically you come down to this drop-down menu, find the pound New Zealand. This is a calculator that you can use all over the world. So whichever, major currency you're using, I'm going to assume a US dollar account, and I'm going to assume a very modest account size. Let's assume $2,000. And so this is where you put your risk. Now, I would advise most people to put a risk on, an average risk per trade of 0.5%, 0.5%. So if you risk 0.5% per trade and you got 10 bad trades in a row, you would have lost 5% of your account. You would have lived to fight another day. But what most people are doing, they're risking too much per position, or they're risking too small a stop loss, so they're always getting stopped out too many times. So even if you think you're being a good boy and you're putting a very small, tight stop loss on your position, and you think, well, I'm putting my stop loss in, you can die a death of 1,000 paper cuts, right? If you get stopped out 100 times on a 10 pip, even though you've set it, very small, if you keep on getting cut up by the market, you'll eventually just bleed to death. So instead, what I try and do is take advantage of bigger moves, but you have to use wider stop losses. And this is where this risk calculator will help you put on the right size risk for your objective. So, in one of, the emails, I said you need to take 170 pips stop loss in the pound New Zealand dollar. But it doesn't matter how big your stop loss is. This is, you've specified, you've predetermined what your risk is. So it could be 170 or 270. Your risk is going to be the same. It's just your position size is going to be smaller to accommodate that. So now for a $2,000 account, you either want to trade a micro account or a mini account. So your contract size, once, based on mini lots, is a 10,000 unit size. If you're trading, let's say, over 35 or 50,000, you might want to use a normal contract, which is 100,000 units. So with a 10,000 unit, basically you hit the calculate, and this says you can do 0.083 mini lots to trade the pound New Zealand, try and get 1,000 pips on it with a 170 pip stop loss. So now what happens? The world comes to an end. Pound New Zealand goes down 170 bucks. And what happens? You lose $10 of your $2,000 or 0.5%, and you live to fight another day. Now, if you want to modify that risk and go to 1.5%, then obviously your lot size is going to be bigger. So now you can trade 0.248. But even if you lose on a 1.5% risk, you've lost 30 bucks of your 2,000, and you'll live to fight another day. But at least you've given the market space. You've given the market 170 pips to bang up and down, which it does do before it cuts loose and goes on that 1,000 pip romp. So does everybody understand that? Does that make sense? So if you guys got so some people say, okay, I think some people had to.
Yeah, most people are saying it makes sense, Mark.
Yeah, no, but some people say they didn't get the calculator. I wasn't, so, okay. So this is, and basically this is how you control risk on all your trades. So people always say, well, how do you, make this, if you're trading a stock? Let's say I want to take a $5 risk, in whatever, Beyond Meat, Tesla, what have you. So now your stop loss is $5. And let's say you have a $10,000 account and you want to take a 1% risk. So 1%, my math is terrible, of 100 of 10,000 is $100. I hope I'm correct. So now if you're going to risk $5 on this stop loss, you can buy 20 shares or sell, whatever it is. So now your risk is $5 on 20 shares. You get banged out of this thing. You lose, $100 or 1%, and you live to fight another day. And this is, trading is all about math. It's all about risk management. Everybody kind of gets involved in the fantasy. If I enter here and I get in there, like Bitcoin, it's like you romanticize. If only I bought Bitcoin at 200 bucks and now it's, $40,000, look how much I could have made. But, that's just fantasy. The market is about reality. You might get into one of those trades and make a lot of money, but over time you're not. The whole idea is to stay in the game. If you're taken out of the game, if you're carried out, if you lose, all of your money, then you can't play another day. So this whole thing is to preserve your capital for that time where you find that one trade that's going to, carry you all the way. And you can see this has been a difficult trade. This has been up and down 400 or 500 pips, for weeks and weeks. And I just hold them. I just sit there and hold it. But now the risk is getting less and less. You can see we're making higher lows and we're stepping higher. So this is the whole key to trading, is finding those areas where you can understand the risk. And, when the risk starts becoming smaller and smaller, then you can take a bigger position for a smaller, stop loss. So here is the daily chart of the pound New Zealand. We saw the weekly, how this is, put on a weekly double bottom 5 years ago. And that pattern 5 years ago has been my cheat sheet, my trading for dummies. It's informed me that this thing on balance is going to go higher. Now, the key word is on balance, because there are a whole bunch of times where this thing goes lower. But you have to know that these are what I call counter trend to the main trend, which is going to go higher. So, I have a way to identify, trades, both, counter trend as well as hopping on board the trend. And it all starts with, so again, if you open this up, this looks fairly, this is the kind of market that I typically want to stay away from, because I don't like sideways markets. And certain markets are just very range bound by, some exotic trading pairs, Australian versus New Zealand dollar, other pairs are just, euro versus Swiss, euro pound. They just get locked in these trading range for years. So by and large, I'm not going to trade that unless I see a very favorable entry. But based on my whole vision of the weekly patterns here, when this came down here, to me, this was a formidable W or double bottom. So now, before you signed up or registered for these webinars, you should have gotten in your packet, a trade kit, which shows you a whole bunch of trading patterns. So I'm not going to kind of, be redundant on that. If you haven't, you should just review the trade patterns, in your, pre-registration kit. But when we see these patterns, this is a double bottom. And with the word bottom in it, it tells me that the market is bottomed. So over time, this is going to do what? It's going to go higher. And so again, the key phrase there is over time, because even in this juncture where it broke out, I said, this is not going to be easy. This came down hard. So it's got to build space. It's got to kind of build some room like that super tanker to then, go higher. And so the more room, the more bump and grind, the more head fakes it does, it then starts de-risking this trade. So when it gets back to this prior breakout area again, by virtue of all of these head fakes, by the time it gets here again, now you have much less risk than, where, you got in here, you tried here, and now fifth chime is likely to be the charm. So now you can start, putting your stop losses very likely underneath somewhere these lows. So you can now start containing your risk, much smaller than when you, had to buy it here and endure like a 500 pip move. So now the risk is, getting smaller and smaller, even though you say, well, it's the market's gone from 186 to 198, it's already gone up 1,200 pips, so how can I get in here? Well, now it's actually really fertile, because now it's on this thing where it's going to break out. And because it's done so many head fakes, it's unlikely to, really give you a major counter move again. So what typically happens is these trades typically break out of these things. Everybody gets excited. Sometimes you get a pullback, and then, if it, breaks out again, then, that's when it's golden. But I do think we are going to break out of this 198 area very, very soon. So the more it kind of just bumps and grinds here, actually, the more work it does, the more thrust and, energy it's going to have when it comes out of here. Does that any? So Reginald says, talks about if you can't trade with less than $1,000, you can, Reginald, some brokers offer what's called micro lots. And you have to find a broker, offers a micro lot, which is a $1,000 unit. And so your leverage is lower to accommodate a smaller account. But yes, you do need a micro lot broker if you're going to trade with less than $1,000. So Mustafa says, is there a double top pattern later? So let me try and remove some of this distraction. So, trading throws you all kinds of, curves, throws you all kinds of things that you think are going to be a pattern. And now you have to determine what is the governing pattern because, we could also say this looks like a double top. And it was. And it did send prices down for a while. And this is why understanding the bigger picture, I understood based on the weekly chart that yes, this is an area of resistance. And yes, it was going to send prices down. But on a longer term basis, prices look like they're going to head higher. So you have to determine what is the main trend. And then you get all of these, what I call counter trend moves. So, right here, you hit a double bottom, a double top. And it did give you, a basis for taking a nice trade. This is what I call counter trend. It was going lower, but to me, the main trend is, so if this goes down, this is a counter trend where this is going in the direction. So I think the trend, this is a stealth bull market. It doesn't look like it because it's been so kind of, but if you, look back to late 2016, prices were at 165 in 2016, 2017, and now they're 198. So while it doesn't look like it, this market is, 3,000 pips higher than where it was 5 years ago. So it is on balance, kind of working its way higher. And it's been, kind of very cagey, but I think it's going to get very thrusty very soon, where you're going to see more of that. So yes, now you need to decide what is the main pattern. And to me, this is the main pattern within this long-term time frame. So the market will always show you, okay, is this a double, is this a double top? And so I can't explain all the nuances, but the thing is, if a market is bottomed here, if this is a bottom, it's not going to go up here and now it's a top. So this is the nuance of trading, is that the markets will always throw you looks and sequences that, look like a pattern. And now you've got to, decide which ones are governing the action. And, to be self-serving, that's why you need to sign up to the Pattern Trader. It's taken me 40 years to kind of figure this out. And so that's what I said at the outset, is that I think I have a very strategic edge on figuring out, what are, how to capitalize on the monster moves and avoid the traps. So, right here, again, it looks like, double top. You get this area. This looks like a key reversal, made a new high, close on the low. And then, that could be. But, even if I think something is going to happen, then I look at what the market is telling me. So let's say I think this is a double top. Let's say I think this is a key reversal. And so now my expectation is that prices, should, if this is a top, this is what you should be seeing. But instead, this is what you're seeing. You had this series of higher lows and higher highs. So it's not bearish. So sometimes I'll trade a market both for what it is doing as well as it's not doing. So if this was a major top area, then it should be a top. But you can see that it's just not going down. So if something's not going to go down, it's going to go up. It's just quite that simple. So this is, and especially with these exotic pairs, and especially when, things, the volatility starts coming down, the markets start throwing you a whole bunch of looks. And to me, the best way of trading that is, first off, peel out and look at the longer time frame, see what's going on in the monthly, see what's going on in the weekly, see the big picture. And then if you're still thinking, then let more time unfold. You don't have to trade every 5-minute bar. Let the market show you. It will reveal what it wants to do. So, when this was dropping, I said, this is a buy. I said, don't try and catch a falling knife. The market will tell you when it wants to turn around. And it does tell you by actually pointing where it wants to go. It made a new low and then closed on the high. And so this was pointing where it wants to go within the cadence of this long-term bull market. So even though, on this day, and I think Mustafa, we were talking on one of my morning webinars or something when, prices were cratering down here. And I said, look, I think this is a buy. But, I'm not going to get in front of it and try and catch a falling knife. I'll wait until the market tells me when it's a buy. And all I had to do is wait one more day. And then it told me it's a buy. And then I use this key reversal, which basically a key reversal bar is the market makes a new low, and then by the end of the day, it closes on the high of the day, that little slash. So that's why the close is so important. I want to see how a market closes relative to the high and low. So this is to me what a key reversal looks like. Market makes a new low, and then it closes closer to the high, maybe not on the very high, but let's say in the top, quarter of the quadrant there. And so I look at, so these bars right here, made a new low, close on the high. So those two guys there, after this double bottom, basically confirmed to me that the market action, the price action, and the patterns were coinciding. And that even though I had to endure all of this crap, that those guys were telling me, they were pointing all the way back here. And so, this is what the market does. It kind of obscures its intentions. So these guys were both pointing in the direction that I wanted to go. It's just now it's going to shake all of the weak hands out before it goes. But the market, has these very subtle pointers as to where it wants to go in a combination of the patterns and the price action and the trend. So Ryan says, why do you prefer bars to candles? Because for this very reason is that I can see, so when it gets all like this, if you have candles, I suppose if you're experienced looking at them, I just see them very clearly. So when I see a bar like this and I see it close on the high, and I can just see those two bars, stand out from all of this noise. Those two bars stand out for me. I can see them. They're very large range. So you can see from high to low, these were very large range bars. And the bigger the range, and then, that it closes on the high, it then tells you. So right here, this guy here, in all this noise, where it made a new low, closed on the high on a large range day, even though it banged, it never made a new low after that. So that was the low right there. So these bars to me just stand out. So it's just, just the way I see. So I'm very visual. And so here's another key reversal. So you can see all of these key reversals made a new low. Every time you make a key reversal here, if you did another one, every time it's followed by a new high. So I look at a combination of the price patterns and the price action, and then it tells me how to, kind of get in and, in a trend, and also where to put my risk. So when I send out an email to our members sorry, I'm just trying to get rid of some of this. So if I'm looking to join the trend here, then I wait for my key reversal bar, and I say to our members, put a buy stop above the high there, put your sell stop below the low, and, wait for a 2,000 pip ride. So I use these reversals and these inside day bars as ways to join the trend. So here was another key reversal. You had all of this, what I call an inside bar coil, where 4 days, you were kind of, all of those bars were inside the range of, a bar 5 days ago. So now you have a key reversal and an inside day bar. So put a buy stop there and a sell stop there, and, watch this thing just rip higher. So I'm just looking for some of these comments. So Mustafa says, you read patterns like art. It's beautiful. Well, yeah, I've been staring at these screens for decades now. And so I know that, I know what in these presentations I've come to understand, I see this so simply, and then I assume that a lot of you guys do. And it's obviously not simple. It's an art. It's not a science. And, you don't have to be right all the time. So I got crushed today in Beyond Meat, and then I made it up in the Pound New Zealand. So, but you don't have to be. If you get one of these trades right, that's what it's all about. It's like, it's about being consistently profitable over time. And does it make more sense to trading in and out 5 times a day for, 15 pips, or trade one for, 500 pips. What is going to be more sustainable over? And so you're not going to find these 500 pip moves all the time. The market takes weeks and days and months to set it up, to then. So all I'm trying to do is take a piece out of the middle, out of big moves. So when the markets move down, I just want to take, 3 500 pip moves out of the middle. That's what I'm trying to do. But this is very different than, looking at each one of these bars and trading in and out of that thing 5 times a day, looking for 7 pips here and there like a squirrel hunting for nuts. It's just, you're never gonna make money doing that way, and you're just gonna burn yourself out. And guess what? If you're looking at this screen 5 hours a day, it will drive you mad. I mean, this pound New Zealand, I've just told every webinar I do for the last 3 months, I've just said, just buy this thing and just leave it and don't watch it. And this is what it's done. And if you're watching this on a 15-minute chart, this is all the way back to March. So we're talking about 3-4 months of this thing kind of going everywhere and nowhere. And then by the time it gets going, you're just burned. You've watched this thing so much, you don't have any objectivity anymore. And a good chance your count has been drained before this thing is even going to get going. Whereas I just buy it and hold it. I don't really care that it goes up 200 pips, down 300 pips. I kind of feel like I know where it's going. So is it Ab? I can't read your full name. ABD Abdi says, man, you're great and you should be proud because you're changing our lives to real dreams. Thanks from the middle of my heart. So that means so much to me. Thank you so much.
Hey, Mark,
yeah.
Question from Kenneth in the Q&A box. Do you trail your stops at any point or move to break even?
So again, you don't want to, if you, want to participate, in something that's going to, go 1,500 pips, just because, the thing starts moving in my favor, I'm lazy. I mean, I just kind of put in my orders and, I just leave them. And I got to tell you, and I shouldn't say this, but in trades like this that I know are difficult and I know are very noisy, and I feel like I, can see the patterns that are going to, there's a lot of times where I don't even put a stop, and I'm not going to advertise that because one day you're just going to get killed doing that. But, the thing is, if I have an entry here and I put my stop loss there, even though it's up here, yes, I could move my stop loss a little bit, but, you could just get one of these moves here. It wouldn't mean anything and go up. And so you don't want to get, look, the discussion of a stop loss and take profit is different for every trade because the expectation is different for every trade. Not every trade is going to, I feel, yield what this thing is going to yield. I feel like this is still a 2,000 pip move from here. So if that's my mentality, then I'm not really worrying about, every, 80 pip pullback here or 150 pips. So I just want to keep my positions on. I want to get a, position. If I buy it here and my stop's there, I'm just going to keep my stop there for the time being. And, once it gets going, then, I can start moving it. But you can see that this thing, gets going and then it, it pulls back. And so, you got to give it a pretty wide berth. And it all comes down to what's your vision for that trade and expectation. And again, this is not some delusion in my mind. I'm just looking at these patterns. And then the market either starts confirming it or it doesn't. So you think this is a double bottom, it comes here, and then all of a sudden it's down there and you go, well, the market is not confirming what I'm seeing. And so, I have a certain, analysis in mind, and then I require the market to confirm it. So I put my buy stop here and, let's say, the next day just opens and goes down and then it doesn't confirm it. Then, no harm, no foul. But once I'm now in the trade, now, and it's starting to look like what I thought it would be, then, my idea is just to, so my initial, take profit is all the way up here, 204, right where, there's some resistance here. So, my thinking is as it, starts confirming, if it starts looking like, this fantasy of mine is now, this delusion is coming true, then I'm going to, move this, this take profit higher and higher to get it out of the way. And then, similarly, yes, I'll start, obviously moving my stop loss, but I don't want to cut off a trade that, is, going to go in this kind of direction before it gets going. So every trade is different. I start with a stop loss and then, I move it depending on, how it's going. But with this, I want to do everything I can just to stay in this trade. So Ruth said, this is making me see how trading could be done differently. Thanks for bringing this to our senses, Mark. You're welcome, Ruth. Nat says, I'm not an elite trader, but thanks to the effects in the live sessions, everybody could make progress. I don't know about recordings. Dwight, somebody's asking about a recording. Do we record these? I think we do. You can just send a message to support at thepatterntrader.com.
All right, yeah, so they will be recorded and they're going to be shared. Right. I was looking at a question from Richard. I don't know if you can interpret, but he's asking.
Oh, by the way, Dwight, are you streaming this on YouTube?
Yes.
Okay. Yeah, so Johanna says if it's streamed on YouTube, then it's automatically recorded, and that's a good point too.
Yeah, but it's also being recorded here, so we're good. So Mark, do you use market intervals like the TRIN, ADD, SKEU, etc. for your analysis?
No. So whatever you see here, I know this looks, it's like, it seems ludicrous to just say, well, this is, so I think, most people think, well, it needs to be complex to be effective. And so, I wish I could find it. I once went on a webinar. There were so many lines. So, you had volume, and then you had, one moving average, and then you had, Bollinger Bands going through it. And, you had like, this is what, it looked like. I mean, it was like there was a million lines on probably a very compressed 15-minute chart. And I thought, well, even if this was effective, my eyes were starting to cross just watching this thing. And that's when I decided to start the Pattern Trader, because I just thought that is such nonsense. So this is what most people's charts look like on a 5-minute time frame. And they think, well, if it crosses over here, then I'll try and snap, 20 pips before it goes back this way. And this is what most people are doing. And I think, the difference in my objective is, it just doesn't make sense to me why somebody would have an objective of, 10 pips or 15 pips when, the market goes, 600 pips in one direction or another. Yes, this sometimes it's not easy, but, I'm looking to take the bigger moves out of the market. 300 pips, 500 pips, 1,000 pips, even 150 pips, if that's all there is to be had. I won't put on an FX trade unless I can see my way clear from one level to the other where I can make 150 pips. Because, my minimum risk is about 50 pips. There's just so much noise in the market, and I'm not going to watch it for hours. I just want to put on my trade and leave it. So if I can make 150 pips, which is a 3-to-1, then I'm just simply not going to do it. And, so I don't look at TRIN. I don't look at MACD. I don't look at volume. I don't look at moving averages. I look at, I just showed you that I've got $148,000 worth of profits on exactly what I'm telling you here. Nothing different. I'm not doing, there's no some secret that I'm holding back that, to me and Mustafa and several others who've been on, these programs going all the way back to this time frame, I said right here, this thing has bottomed. You just got to trust it. And some of my emails, I said, look, this looks terrible. You just have to trust the pattern. You have to trust what you're looking at here. This will take you to the promised land. And not so easy when it, comes crashing down and you look at your screen and now it's down 500 pips and you think, well, the world's ending. But, to me, it's all about perspective and objectivity. The market is like a magician, right? A magician doesn't walk on stage and just pull a rabbit out of the hat and, there's no mystery. And this would always kind of kills me. And that's why I'm always early, because I see this thing and I think, well, everyone's going to see it. And now I got to get in. And the market, kind of does its distraction. It gets all of the weak hands out. And then once you're all ground to death, then it just takes off. But, it tells you where it wants to go. And this is why I've just learned to put my positions on, sometimes I just get in areas where it's come down and I just trust, that, it's come down and it's probably not going to go any lower. And I don't put stops in, which again, I don't want to advertise that, because you're going to get crushed if you do that in the wrong, at the wrong time. This is only for select things. I've been watching this pair for months and months and years and years. And so, it's just something that, I come to trust based on, weeks and months of different, cadences and patterns. Dennis says, how about the best U.S. broker? I don't really recommend brokers. I don't know if you're meaning stock or Forex. There's very few Forex brokers left in the U.S. If that's what you're looking for. Mustafa says, I was there, just amazing. I'm making profit since learning from Mark. So Mustafa's been on our elite program for a while. And yeah, so he can be, I've been saying the same thing on 3 of these free webinars going all the way back to, January. And I said at that time, it's not going to be easy. Some trades are just more, when a market is turning, from one direction to another, that's when it's always more noise. When the market's trending, then it's easier. But if a market's turning from one direction to the other at the turn, there's always a lot of noise before it gets going again. And that's just the nature of the beast. So every trade is different where you catch it, in the trend, as to where, your vision is as to where it's going to start and where it's going to end.
Mark, question here from John. He's asking if you can talk more about fake outs.
Well, so yeah, the market gives you all kinds of looks. So right up here, was this double top? And then, now it looks like a double top because now the market is crashing here. And, it's an open question. And I remember being on, a number of these webinars where, this actually cratered a lot more than I thought it would. I thought it, would get to this resistance, kind of test it, and then find its way back out. It even rocked me, or, kind of nothing surprises me. But, when you get it went from what, 198 down to 192, that's a 600 pip, carnival ride the other way. And I was saying, look, this may be over. It's, there's self-doubt. But, then what I say to myself is, okay, prices have come here. Now, what's the likelihood that prices are just going to cut through all of this junk and go straight down through here? So now you're saying, okay, I'm long, I'm really shaken out, should I get out? And then even maybe you're saying, well, should I get short? And then, I was saying at that time, look, this looks terrible. I think it's going to be like Humpty Dumpty. It's going to, put itself back together again. It looks, kind of crazy here. This is what it looked like. But I said, I just trust this. I don't know how it's going to do it. I don't know when it's going to do it. It's just going to find a way to go back higher. And I said, look, even if you get out here, if you say, okay, I want to sell here, and you call uncle, then, you also got to by definition say that, I would then look to short it here. And then you got to say, well, now you got to cut through all of this junk and support. And markets just don't cruise through areas like this through a knife like butter. So again, this one is one of the harder ones, and it really puts you to the wood. And that's why I kind of just try and get in, in these early dips where I use the sell-offs to buy into it. And then I don't really put a stop loss because I just trust that it's going to get to its destination. And again, that's not a great advertisement. So the market does give you fake outs all the time. I'm still trying to figure out this dollar yen. is this a fake out here or is this real? So the market gives you all kinds of looks that creates this doubt. And what I say, if you have doubt in your mind, then you just need to peel back, to a bigger time frame. And if you still have doubt, then don't trade it. Just let it do it more history. You might miss the first thing, even if you have an inclination. But again, for me, dollar yen is as much for what it is doing as well as it's not for what it's not doing. So I've been trading dollar yen, and maybe I should peel back to even a wider time frame. Let me just put some more time on this. And some of you may have seen this, but I've been looking at these yen charts and trying to peel it apart. And I think we are on the cusp of a major paradigm shift where there would be a lot of money to be made if you get it right. And it's all about kind of getting it right. So it's about as bright as I can get it without making it obscure. So so this is the US dollar for the, versus the Japanese yen. And I have been making so much dough in this thing for years. Again, trading this dominant governing price pattern. So you can see, right, 5 years ago in 2015, we made a new high, backed off, went to the high and formed this perfect double top. And now with, the word top in it, it implies that the market's going to do what? It's going to go lower. So it dropped from 126 to 100 over 5 years. And also in that sequence, you had a head and shoulders. So now you had the double top, head and shoulders. And so this to me was what I call my governing price pattern. So even though it kind of did all this, this was, governing it. That every time it rallied, I was looking to short it because the market told me that it topped. Now, since it topped, it's been putting on this descending triangle. And you can see it's been just kind of going in the seesaw of lower highs against a common low. And now you're back here again. And now you're saying, well, every time it gets here, it drops there. And I'm thinking this may be too much of a cliche that, we're getting used to it. And so you can see that every time we came up here, we did these double tops, the market dropped. But here, you've done this double top, and just like pound New Zealand, when the market should be doing this, it's doing that. And by it not going down, it implies it's going to go up. And so we are at this major inflection point. Is this a fake out or is this going to be the real move? And more, I just have been on my hands. I kind of let this kind of, gestate a little bit. And you can see that we're at this inflection point and we're breaking out. You can see that we did break out here. We came back into the range and now we're coming back out again. And so this is also forming a huge coil by virtue of all of these weekly bars, kind of one inside the other for weeks and weeks. And so the more you kind of build this coil, build this energy, then, when it comes out, it's just going to come out with a lot of energy. And so, I thought based on this sequence of things that this is what we were going to see. But, the market tells you what it's going to do, and you've got to surrender to the will. So whatever I think, is bollocks. It's just based on very subjective analysis. I then defer to the market. So I draw my boundary, my structure is like this, and then I see how the market moves within the structure. And if it stops kind of, going down and doesn't start cooperating there, then, I just go with the prevailing winds. So to me, what I would do, I would just put a buy stop right there around 110.35. That's above that weekly high. And if we keep making new highs, at some point, this thing's going higher because you can see that we've had a cadence of lower highs and higher highs over the course of the last couple of weeks. And so this is coiling, and this is going to uncork, I think, to the upside. So, it had a number of fake outs here, and there's a number of traps in here. And so, to me, just I have a way of just putting a boundary and structure and then standing back and letting, the market tell me where it wants to go. So it was right here, once I kind of figured out that we were in this descending pattern, when we kind of got into this area, this double top, there was a very narrow range day right there. That was a weekly bar. And you can see this was the narrowest week that I could find going back years and years, where the entire week, the whole range was about 50 pips. And what this told me was that by virtue of this narrow range, is that this move was stalling out right at the top there. And if something's going to stall out, it's going to go back lower. And I just figured that, I could understand now the sequence of, this cadence. Once you can see a pattern starting, then I can see the rest of the pattern. And so in order to take advantage of this, I sent out an email to just put a sell stop here at 111.61. And that was on Sunday. And then what happened was the market opened on Sunday and started to go higher. So it opened and started to go higher. And if it just, kept going higher, then my sell stop, my pending order never gets triggered, and no harm, no foul. But what happened was it opened, and by Wednesday, it turned around, triggered my sell stop, and put me into a 650 pip move. So this is how I use the market. I just put these orders in strategic places and let the market do all the work for me. So in this case, I would just put a pending order above these highs. And if the market triggers it, I'd have a stop loss somewhere here. This would be my risk, and that's probably my reward. So,
hey, Mark, you could probably take that question from Adam Wilcox.
What is that, Dwight? What is the question?
He's asking, what's your overall opinion on gold? Are we in a counter trend down to 1825-ish?
Well, I put a sell stop in gold over the weekend, and it got triggered. I am short gold right now. So I do think that it's in this resistance area at 1950. I was very skittish about being long, and it does feel like it wants to pull back here. So I am short right now. Gold is, in this, vacuum right now. So yeah, I'm short. What is your overall opinion? Gold. Do I think COVID is going to influence the market? I couldn't give a hoot. The market will tell me if COVID is going to, affect the market. The market will do something. So to me, why I trade price is because price is ahead of the news. Price is ahead of information. So tomorrow we're going to have very important release from the U.S. Federal Reserve. So right now the markets are standing on a pin, wondering, when the Fed is going to react to all of this inflationary things, when they're going to start tapering. All of that language is going to be very important to the market. And so, but the market starts telling you ahead of time, when, it starts getting dodgy. So right now the Dow Jones, this is, by the way, Baidu, and it looks terrible. So this is a stock that I'm interested in, shorting. So the market is ahead of the information. So if we look at the daily Dow, you can see that the Dow is starting to kind of put on this rounding top, and looks like this thing, could fall as a result of whatever's said tomorrow. You can see that these key reversals made it, all these new highs, close on the low, is starting to, tell you that this is starting to, point lower. So we don't know what the Fed's going to say, but the markets are ahead of what the Fed's going to say. And so I trade the markets. I don't trade news or information or COVID or what have you. The markets will start peaking out ahead of whatever is going to turn it lower, if it is going to go lower.
Or to a question from over on YouTube, Jazz is asking if you could do an analysis on natural gas.
No, I'm not going to do that. I'm sorry. It's a pretty obscure thing. And, I just want to keep it pretty mainstream for the benefit of most. So really what I'm trying to say is that you can apply, in a moment, I'm going to give you a link to my book, which elaborates on this 4-step trading methodology. And you can apply the principles of that trading methodology to any trading market: crude oil, gold, natural gas, corn, the euro versus the yen. I trade everything under the sun. And I do so without the knowledge of anything, of any of the instruments I'm trading. So I don't know what the export import things from Ghana are on cocoa. I don't know what, are the countervailing winds in the euro yen or in the pound versus New Zealand dollar. I trade everything from the viewpoint of a picture. I say, is this, so I look at this thing and I go, well, what's going on in this chart? This has been an uptrend, right? So we're looking, this is the Dow Jones, this is an uptrend. But, the trends it's starting to kind of stall out here. So, every trend or movement changes, and the change begins with a chart pattern where there is some resistance or some collection. So in this case, it looks like we've got this rounding top here. And then it's hard to see buried within here, and I should do it on the other chart, but you can see the collection of these reversals. So these reversals made a new high, close on the low. They all tell you that there is, substantial, resistance here. And then, I say to myself, well, is there, a chart pattern? So that, is a rounding top. Now I'm looking at all of these instruments, these stock trading instruments within the cadence of these ascending, broadening price patterns. And this is how I made a ton of money in gold, where this is an ascending, where the prices are ascending. It starts out life narrow, and then it widens or broadens out at the top. And it looks like, prices need to kind of come down here and test the lower end here. Now they may or may not, but I'll show you how I made a huge amount in gold recently, trading an ascending, broadening price pattern. So we don't know yet. I mean, there's still kind of a double bottom here that's kind of controlling things, and you may see something like that. So it's just right now the markets have gotten pretty complicated. You can see for the most part we're going very sideways in the indexes. So to handicap the indexes now has become pretty difficult, and that's why you have to be a stock picker. You have to look at individual names. Certain names are going up and certain names are going down, and you can't just say, when everything was going up, it was like a rising tide raises all ships and you could just go long anything. Now it's becoming more complicated. And I suspect that, the good times are over in the stock market. These indexes are going to have a harder time going higher. And so you really have to kind of know what you're doing on these individual names. But the market is ahead of it, no matter what market you're looking at. So I talked about gold. I talked about this ascending. So when gold was going higher, I started telling our members to start pulling out at 2100. And this is where, I find it very difficult to do what I did do. And, that's why I kind of didn't want to do in the beginning, because, when gold is soaring to $2,100, I say to our members to actually just get out right at the top. And there was no real technical reason other than I saw the volatility start expanding. So you see that these weekly bars, the range from high to low, is so much bigger than anything else that preceded it. So whenever I start seeing volatility expand, and just denotes that there's a lot of speculation and emotion, at that point, I just step away and say, okay, I'm out. And if it goes higher, then it's I'll let the next guy make some money. But it turns out it was right at the high, and then midway through, I started seeing this ascending, broadening price pattern. So right here, when I saw these two key reversals here, made a new high, close on the low. Right here, I said this thing is going back to test the lower boundaries between 1650 and 1700. So at 1950, I started shorting the bejesus out of gold when everybody was saying that gold's going higher. JP Morgan said gold's going to $3,100. Everybody said gold was going higher. But when I started to see this pattern, it made sense to me that we were going to test the lower boundary. And it went to 1671. And then we put this double bottom here, which suggested that prices had reached a real low and that we were going to shoot. And so now I'm a little bit ambivalent. Is this bottom, in where we're just going to over time, see this thing go higher, or, are we going to start seeing this thing pull back down to this lower support level? So I think we're just kind of in between, but it's these guys here that I thought, once we kind of got in this geography, that there would be a lot of resistance. So it was over the weekend when I saw this inside bar on the weekly. I said, look, let's just test the short side out. Put your sell stop at 1161 and let's see what's going to happen. And right now it's trading at 1156. So we're making about whatever 60 pips in this thing. And I don't really know what it's going to do here. It's kind of betwixt and between, but I just feel like we're going to start pulling back. In the name of, so I'm gonna, Dwight, I'll hand out the book in 5 minutes. I'll take another 5 minutes of questions, and then I'll hand out the link to the book.
Okay, no problem. And remember, there's something you should mention regarding a charity.
Yeah, that's the link to the book. Yeah. Mm-hmm.
Okay, all right. And a question here, well, it's more like a comment. Russell was saying it looks like it will swing back on the higher time frames on the quarterly charts.
What will, gold?
He said that when you were talking about gold.
That gold will swing higher?
Yeah.
Look, I don't know what gold's going to do here. It's kind of in the middle of the tennis court where I see that there's, a lot of resistance here. There's a lot of support here. And I just feel like it's going to be pretty messy. So I don't have a good.
Sorry, he said he was talking about the dollar yen.
And it's going to do what now?
It's gonna. What did he say? Sorry, I lost it. It looks like it will swing back down on the higher time frames, like the quarterly chart.
Time will tell. I'm just kind of looking at it, what it's not doing as well as what it is doing. So this is the monthly chart. And, it looks like it's grabbing a foothold on the monthly also. So every one of these price bars represents 1 month in time. And you can see we're trading within the confines of a symmetrical triangle. We're starting to break out of this too. And so within the symmetrical triangle, I also see these key reversals right here. So this is where it grabbed a foothold. And now you can see also on the monthly and the weekly, we're right at this inflection point. And by definition, an inflection point is it could go one way or another. And by the way this is looking, it looks like it's going to go higher. So these triangles, they're a neutral pattern, right? Prices can go lower or higher out of them. They're neutral. They're like a flag. And so this looks like a continuation where you kind of had this double bottom here. You've had this 6-year consolidation, and now it looks like you're going to continue, this uptrend. And so, I thought we were going to break to the downside, but what I think doesn't, make mean a hill of beans. So, there's still a lot of resistance here, but this is not going down. So this has stopped going down. And, when something, stops going down, it goes up. So I just feel, yes, we are on the cusp. This could be a fake out and we could still see something like that. I'm not discounting it. We are right at the moment of truth. So when you're a little bit unsure, you can just kind of hang out and watch it. To my mind, we're trading at 110.01. I would just put a buy stop in the event that this thing wants to sneak out of here. You could either put it aggressively at 110.35 or over this batch of weekly things, which is, I don't know where that is, around 111. So you could just put a resting order there and not worry about it. This is a monthly chart and it could, do this for another 2 months. And then one day you wake up, it's through your thing and you're staring at 300 pips in your account. But what I do is I put a boundary, I put a structure. So when you're just looking at prices, like this, it looks pretty arbitrary. How the hell are you supposed to make money doing this? And I've made nothing but money watching this thing because here was the double top and head and shoulders back in 2015 that said that this market unbalance is going to go lower for a while. And then you had this triangle, and every time it came to the top of the triangle, I shorted it. So I've just been having a field day, trading this thing. And now it's starting to show a different behavior than what it has in the last 5 years. It's stopped going down every time, it kind of reaches, an apex. It reached an apex, but it's not going down. So again, what doesn't go down is just going to go up. So I'll give you the link to my book in just a moment. People are asking about my book. I'll mention that in just a moment. I'll take one more question, Dwight, and then I'll hand out the link to my book.
All right, this is a question from Paul asking, what tips do you have to avoid being tempted to watch the screen all the time?
Well, first off, you have to, like anything else in life, it's all about discipline, and discipline is about the rules. So first off, you have to understand, have a basic understanding of why you're doing something and what the rules are. So if you're saying, okay, this is a monthly chart, these are monthly bars. It takes 1 month to make this entire bar, right? So that's a lot of 15-minute time frames during the day. So a lot of people, this is a distraction. It's, it's like the gamification of the markets. People, love to gamble, and there's a lot of action and a lot of fun. But at the end of the day, that's kind of counter to the, main goal of making money. So you have to really first off say, what are you trying to do here? Is this a distraction from your real life? You just want to have some fun? Or do you want to make, money on a real basis, on a consistent basis? And so that's less fun. That's just, putting in a, monthly buy stop here, and that may not get triggered for another 10 days. And so you're not doing anything. And so the way you don't watch this thing is that you put your buy stop there, you put your sell stop here, and then you leave it. And if the market triggers you, now it's on its way. And if it comes back down and stops you out, then you're on to the next one. So it all comes down to, first off, and that's why I send out an email on a daily basis. This is just once a day. This comes out at the end of the day. And so this is the trade for the day. You might be looking for 10 trades or what have you. This is one trade that I did, 14 days ago, what have you, that is now up, 40 grand for me. So, this tripwire, 10 days ago, 196.11, we're trading at 196.70 or so, 160 pips higher. And that was 10 days ago. And so I haven't done anything else really in FX since that time. So it's, this is not for everybody. Anna says, I only look at the screen like 1 to 5 times a day now before I spend many hours in front of the screen before I learn. So that's why I kind of, recommend you look at a daily chart where you send your boundaries. So like tomorrow, I have different ways of, entering a market, but, first off, it comes down to determining if you want to get in a trade. And then once you get in a trade, this is Baidu, and you can just see that this thing looks like it's, wants to come down. It's, I'll actually put it up on a bigger screen. So again, I open up a chart and I say, well, what is this thing doing? Is this an uptrend, a downtrend? And, this is kind of difficult because it looks like it's just been, all over. But, on balance over the last couple of months, it's dropped from 354 to 186, pretty much in half. So this is a downtrend. And within the trend, you can see the head and shoulders pattern here. You can see the bigger head and shoulders pattern here, whatever you want to call it. And then this thing is kind of drifting lower within this descending triangle. And there is some support here. But, this is starting to, drift here. And, there's just kind of no risk that this thing's going to do that. So if something's not going to go up, it's going to go down. So tomorrow, on the pre-opening, I might, see if this thing's up like $1. And I would just short into that before the market even opens. So this is Baidu. And so let's say you just want to trade it today or tomorrow. You would just put your pending order in to put a sell stop on a new low. So you can see you've kind of got a mini little double top, these little reversals here. So I would just put a pending order to sell it on a new low and buy it if it takes out the high. So that's how much risk you have. And, this thing could really open up to the downside. So that's how you don't watch the screen. You put a sell stop to get in. You put a stop loss in the event that it turns against you. And then, you could put a take profit if you want. I tend to just watch how the market, if the market starts coming out the way I do, then, I put a stop loss, a take profit way away or not at all. And then I just let the market see what's going on. So, today the low in Baidu was 186.10. We closed at 186.30, about 20 cents off the low. So I put it just a sell stop to get short at 186.10 and a buy stop at 190. So you've got a $4 risk to probably make $30. So John says, I used to have 10 time frames. Now I only use daily, weekly, monthly. It's a lot easier and I'm building confidence. So yeah, if you just step back, it starts calming down the noise. So if I look at Baidu on a 10-minute chart, that's what it looks like. So that's the opposite of calm, right? That looks like up, down, sideways. Maybe it's a buy now, maybe it's a sell. Very difficult to kind of sort out what's going on here. But if you want to calm it down, just peel back and now you can see it starts smoothing out. You can see that it's just drifting lower. It doesn't look like a carnival ride. So the idea is to see the forest for the trees. And you simply can't do that by looking at an intraday chart. So you can see that this is also, this is a weekly chart. And here was the key reversal 2 weeks ago. Here was a little inside, kind of, it just snuck a little bit. So it's a narrow range bar. And now I think you've made a new low on last week. So you're starting to just, drift down. Now there's going to be a little support in this area. This is where it gets a little tricky, where some of these stocks, they're at areas where they look like they're going to break apart, but they've got a little bit of support. I've been short, or I'm long the options rather, long the put options in this thing called Run. And again, this thing looks like it's going to get cut apart, but it's just kind of hanging out at this support area. So this is, to me, the double top, head and shoulders, this is going lower. There's just no doubt in my mind. I don't think you're going to see that high. And so you kind of, been just treading water here, in this area where there is a little bit of support and resistance. So this is where the support and resistance is. And I think, very quickly, you're going to come to the lower end of this thing. So this is called Sunrun. Ticker symbol is RUN. So I don't really care what the ticker symbol, I'm just looking for a picture that I can trade a risk reward, where this is starting to tell me this is over. This double top, the head and shoulders, that is a reversal pattern. This tells me that this thing is going lower. Now the question is, when? I don't know when, but it's going to go lower. So now I'm just trying to figure out how to get in on a risk reward. So this is a weekly bar where, I could put my sell stop under there, my stop loss there. That's my risk and that's my reward. And that's really what it's all about. Setting up these trades where you can identify, legitimate risk reward trades. And you don't have to be right all the time. But if you get it right just a few times, you can make an awful lot of dough. All right, so I'm going to post my book now where you can really understand this 4-step process, how to identify the trend, find the chart pattern, then drill it down to a few days where you've got your inside day bar, and then you basically layer it with an execution, a buy stop in something you want to buy, or a sell stop in something you want to sell. Now, the nice thing about this is that it's basically pay what you want. So $5, $10, $100, whatever you think this information is going to be worth to you, you decide, you determine what you want to pay. And then my commitment is on any of the royalties, any of the books that I sell, and I've written like 5 of them. Anytime we sell anything for any amount, I take that amount and double it and send it to the American Childhood Cancer Organization. So last year, I think I sent in $30,000 from, which was double the proceeds that I took in from our book, and sent it to the American. So you know that when you sign up or you pay for this, you're getting, great information to learn how to trade, this methodology. And B, you know that your dollars are going to be doubled and sent to the American Childhood, Cancer Organization. So you basically click that link, determine whatever you want, and away you go. So that's the Freedom Trader Playbook. I'll put the link in the chat box. So this will inform you, I know it's been pretty conceptual, kind of going through the charts, and I talk about this thing abstractly, but the book will tell you, more and more on, how to apply this methodology to any trading market. Gold, natural, you see, I looked at gold, I looked at Baidu, I looked at the Dow Jones. It doesn't matter what market is. I look at everything from the prism of price patterns, trend, and risk and reward. So Dieter says, could you show us how to trade the stocks and options? I find it difficult to understand how to identify when to use the calls or puts. So, I realize I'm just going to walk you guys into a minefield. 90% of puts and calls expire worthless, which means you're going to lose your money awful lot if you just buy naked, puts and calls. I do that a lot. So I do that when I think there's going to be the trick with options is that you need a move, and you need a move right now. So last 2 weeks ago, actually, I'll show you in these charts. I think it's easier. Um, 2 weeks ago, when I saw this setup, and I sent this out. So this was the email that I sent out on May 25th to our elite members. Mustafa and others who are on here, will testify that this is the email that went out. And I just had a suspicion that this wasn't just your kind of vanilla setup where, you buy something and, you see where it's, I just had a feeling that by virtue of what this didn't do as much as what it was doing, that we could have an explosive move in the stock of BYND. Ticker symbol BYND. It was a buy stop at 120.5, and you can see my stop loss was only $4 away, and then my take profit was 131, and then in my next email I moved it to like 152 or something. And I said for the past several months I thought that BYND would crash, which it did do. I said when it did crash, following the crash, it's taken a U-turn and appears to form a rounding bottom, and I just thought that this was a trap under here. And I thought if it is a trap, it's going to be a squeeze, and it's going to turn around with a vengeance. So if you have something, feeling about something, you can buy the stock, put a $4 risk, and that's one way to do it. If you want extra leverage, then you buy call options, which are weapons of financial destruction, because you have to be right and right now. So I was buying call options on that. You could see it was Tuesday. So I literally had to the end of the week. So you can choose your expirations, but the further you go out with options, the more you're going to pay for that premium, and then you're going to lose the leverage. So I was buying these options on Tuesday at about $1.50. When this thing opened, I was buying stock in the pre-market at 121. By the time it opened, it was trading at about 123. And I could just feel that this was going in the direction I thought. So I started buying the 125 call options and the 126 for about $1. And remember, this was trading at about $3, but that meant that the stock would have had to have moved like $5 for me to break even by Friday, or I risked losing all of my money. And so I ended up paying like $1 for these things. You can see in this particular day, they were up 250%, already, and they ended up going to $23. I bought these things for $1. They went to 23. So you can see I had 277 of these that I paid $1 for. I was up $50,000 on that bet. And here was where I owned the shares. I bought 5,000 shares, which obviously gives you, less leverage. I had to put up 620 grand to own 5,000 shares. And this was a bet on 27,700 shares. So you have to multiply the quantity by 100 because that's how many shares each option represents. So you could see I bought the 125 calls when the stock was around 123. So it was, plus you add $1.50. It had to go to about 126.5 for me to break even, or about $3.50. And you can see it closed at about 127 that day. And then the next day went to 140. So, but you can see the difference in the leverage. For 5,000 shares, I had to put up 621 grand. For 27,700 shares, I put up 35,000. So you get, 10 times the leverage. And you can see my gain was, I was making 141% on my options bet, where on my stock, I was making 3%. So this just gives you a lot more leverage, but I would have to have forfeited $35,000 if I was incorrect and the stock went against me. So you can see the next day, went from 120 to 135, and I was up 58 grand. And then the options that I bought for 1.5 went to 950. And then the next day it went from, 950 to 1550, and the stock went higher. And so I ended up pulling out a lot of money on that trade. So here was these options that I bought for $1.50 in another account. They were trading at 19.5. I ended up getting out of these at about 23 bucks. I made about $1.2 million in 3 days on this stupid move. So it's all about getting the timing right. So I've been trying to short. I bought puts in Run that expire on Friday. So I bought the 42 puts. I'm only $1 out of the money, but if this thing just keeps going sideways, all of those puts will expire worthless. So to me, it's I'm not an expert in options. I just use options to get more leverage if I think a move is going to happen immediately. Like sometimes I think, okay, Run is going to go down in some time frame. I don't know when. So you want to own the stock, and it's in this bunched up in this thing where I'll be right, but I may not be right this week. In which case, I would lose and forfeit all of my option money if this thing just hangs out above $42. So options aren't really this mystery. They're just, you have to, you're really betting on the underlying of what the option represents. So whatever the instrument that's underlying that option, you're betting on that. You're looking at that picture and then using the derivative to try and, amp up your leverage. So I would say, I would stick to buying or shorting stocks for now to use less risk. And then it's just a question of, and then, sometimes it's just instinctively, some options are just very expensive. So even if I see something that I think is going to move, then I go to the options. And to my mind, to make money in an option, I have to see my way to making at least 5 times whatever I put up, because so many times you'll lose half or all of your money. So, just one trade in Beyond Meat where I bought it 1.5 and it goes to 23, obviously that pays for a lot of the losses. But those trades, are rare. Typically I'm looking for a 3 to 5 banger, on my option trade. And so if you're paying $1.50, you want to see that thing go to, $5 or $7. And so that underlying has to move, that $5 or $7 in a very small time frame in order for you to achieve that. So even if I think something's going to move, like very often I look at Zoom both up and down. The options, because it's so volatile, the premiums are so much bigger, so that it's very hard to make 3 to 5 times your money when you're paying so much more upfront. So I kind of look for just little hidden gems where I kind of look for something that I think is going to move, and then, determine if it's worth paying for it. So I think Run is going to move lower. So I just go to the options table. It's trading right now at 43. I'm already in the 42s. And I paid, I don't know, about 30 cents for this. You can see it's up 200% for the day, these Run options. So this means that if I paid 80 cents, that Run has to settle at $41.20, because you have to subtract the 80 cents you're paying for it from your strike price to determine your break even. So now this has to settle at $41.20 by Friday for me to break even. But now if I'm saying, look, I want to make 3 to 5 times my money. So 3 times this is $2.40. So subtracted from 42, this has to close at $39.50 by Friday for me to make a 3-banger on this series. And then I come to the chart and say, look, can I legitimately see this thing going to 39.5 by Friday? I can, but it's also very difficult because there's, a lot of noise, in here. There's a lot of support in here. So you can see it drop today. Tomorrow, we're going to have some kind of Fed thing and it could drop out of the sky tomorrow. So I need to see this thing down by, here, 39.5 to make 3 times my money. And it could happen. This thing is in a sharp downtrend. We broke hard today. And so the way I would, handle these things is that I actually, when I look to buy a put, is that I actually hope this thing opens up like 50 cents tomorrow, kind of opens, goes up 50 cents. And so then I will buy the puts, which will then start getting cheaper as time erodes and price goes against you. And I'll just maybe throw a foothold in and try and buy these puts for 50 cents, if I got a dollar rally tomorrow. And then, hope to get some kind of move on that 50-cent thing. So I just use the puts and calls on something that I think is going to move very quickly. But it's a very risky thing and probably should avoid it until you kind of get the hang. And look, there's nothing wrong with buying or selling the stock and just, making money doing that. This is okay. So yeah, I just use, these puts and calls to, take advantage of impending moves. And I think run is just a lock to go down. There's just no way this is going to go higher. You can see this thing's going. And then, when why I use bars is that to me, these bars just stand out. When I see this key reversal, made a new high, closing the low, made a new high. So I just see these bars all the way here. And these tell me, these are actually pointing in the direction this market, this thing wants to go. My only unknown is how long it's going to take to get through this support. To me, it's not a question of if, but when we go through this 37.5. And that could take another couple of weeks. So that's the problem. I'm long these puts, the 42 series. Let's see what happens tomorrow. I'll probably close them, if, I get, more premium, just because we're going to start dancing around this support area and they go off the board on Friday. So that's kind of the dance that you have to do as these start, getting closer and closer to expiration. One day where it kind of, goes sideways or against you, you can lose 80% of your premium very, very quickly. So you have to get this right and right now. It's really a game of chicken. All right, guys. All right. I think I'm going to love and leave you there. We'll reconvene tomorrow at 4:30 Eastern Standard Time. Thanks again for checking this out. Hope you're getting some value from it. I thought I put my link up there. So if you if you want to check it out, here's my book. I think the link is in the chat box, and I will see you tomorrow. Have a healthy and prosperous trading day. And tomorrow's Fed day, so just be careful. You guys are all welcome. Thanks, Dwight.
No problem. See you tomorrow.
Okay.